Hey guys, good morning. It's BA here. It's Saturday morning, December 31st, 2016, last day of the year. Hey, first of all, Happy New Year to all of you. And appreciate all the well wishes that you guys sent back via email. Yeah, I've got a little bit of hoarseness going on right now, so we'll make this straight and to the point. So what we'd like to do today is give you the Friday recap and just cover some of the last day of trading 2016 versus last day 2015. All right, first thing we're going to talk about, go through our weekly levels, give you the recap on those. Hey, look at the S&P. We finally got a little bit of down movement, some red bars. Yeah, that's really good. It just seems like this thing gets caught up in a mode where it never ever goes down, and then it does. So, it was nice to see the last couple of days of the trading year act like a normal market. We'll see how this pans out in 2017. I'm really looking forward to some volatility through the month of January. As we take a look at our UVXY trade, that to me was we put that trade on rise. Volatility started to tick up. So that was just lucky timing on that one, but it was just getting to the point where it was utterly ridiculous. So we placed that trade. We'll see if we can pull out a nice profit. We're already up a decent amount, in the trade right now. So I plan on holding a while longer just to see if we get some more volatility in the month of January. But anyway, our S&P levels held. I'm selling puts a couple of weeks out at the 2200 level just to tempt the option gods. Love to get this thing down way below that level right there. Not worried about that level. I know we'll be higher than that next year. So if I have to eat those for a while, I'm not really worried about it. In fact, I don't have that many on, so it's one of those where I probably won't even defend it. I'll just keep adding to it if we do get a protracted down move. Okay, ZBs. ZBs are ticking up. So that's kind of why I'm putting these pairs trades on, buying ZBs, selling ZNs. And again, that ratio is 1 to 2. That's not really the absolute best ratio. It's somewhere around 2 to 3. 2 ZBs to 3 ZNs I think is a little bit closer to the relationship. So, but anyway, if you want to do it small, 1 to 2, I put it on, took it off for a really small profit. That was a mistake. I thought I just did some quick math on my phone, and I thought I was up at my target. I wasn't. I was profitable, but I only ended up taking it like, I don't know, $75 or $80 out of the trade. It was only in it for a day. Put the trade back on again. So I think we're pretty close to break even in it. So if we get a down move in the stock market, up move in bonds, that pairs trade should work out pretty good. Crude oil just sat there, had one good rally day this week, and sat there the rest of the time just marking time. Don't expect that to last very long. But it stayed within our ranges. What we're looking for in crude? We're looking for a down move. We're looking for this thing to give it up a little bit. And I'll start making some downside projections, if we get a nice little down move. But it looks like the 54 area is just a really tough area for it to get through right now. The dollar, we got really lucky and put that bought gold, sold dollar, that pairs trade just at the right time. So we saw a little bit of pullback, give back in the dollar toward the end of the week as well. And guys, just look at the dollar and look at the stock market. Yeah, those things are looking really close to the same right now. Last year we had gold. We had crude in the stock market. Just tick for tick with each other. Right now, the dollar and the stock market look pretty close. The S&Ps and the dollar tracing out the same chart pattern. So we'll see if that relationship continues. But anyway, dollar stayed within our ranges this week. We had that nice gold trade versus the dollar, so that thing just did really well for us. Hopefully some of you guys got into that trade with me. Yeah, once gold started moving, it just moved up, and it was just a pure probability play, guys. That's all it was. Gold down 6 or 7 weeks. Whatever that percentage was that it was down for that period, it was one of the largest down moves in that period that it had ever seen. So gold has a tendency to be positive every time. I forgot what sentiment trader put out on that, but it was either the 3-week mark or the 2-month mark. I can't remember right now. So gold might have a little bit left in it to the upside. I think it could go up quite a bit, especially if we get some downside movement. So I'm going to be looking at gold for more trades going forward. Maybe against the dollar. We'll see. Maybe against crude. I don't know. I'll take a look at those relationships. All right, so that's it for the weekly level. So you'll notice that all of our levels held. The ones for you guys, the one standard deviation levels held. And once we start getting a little bit of IV pumped into the stock market, I'll probably just start playing those one standard deviation levels. Those things have since I've been monitoring them real time, they've closed inside there 90-some% of the time. So we'll ratchet that 2 standard deviation strangle down to 1. All right, here are some of the trades I put on this week. What I don't have in here are I've made several winning short-term trades on my really short time frame charts. So I've been up early of the morning, 3 o'clock, at 8:30 at nighttime. I've just been putting trades on whenever I get setups. And I'm trading gold, I'm trading crude, I'm trading the British pound against the Australian dollar. Whatever is moving, I'm putting those trades on. And it's really slow the last week of the year, so the gains aren't really that much in those things. But I have had winning trades week long. I just didn't include any of those in this. It is reflected in my overall portfolio's value, though. So these are the trades that we put on this week. There's the first. They're all highlighted. So the first one's the ZN pairs trade. Like I said, made about $60 in it up for a day's trade. Guys, those things hardly move. You might have drawdown. I think the most I had a drawdown in there was like $200 one time when I noticed it. So that's a really easy pair to trade and hold if you guys want to put those on. I bought some puts in the S&P just prior to the down move. Again, just lucky timing on those. We had a nice little play in that one. And then one day in the gold and the dollar pairs trade, and we banked about $1,300 in that trade. So it was a nice week. Nothing big to write home about. Just a nice steady week. All right. Just a second here. Guys, I'm gonna stop for just a second. I'll be right back. Okay, guys, I'm back. Just needed to reset my my recording software here. I wouldn't pick the Thinkorswim up. So let's take a look at the stock market itself, and just see if we can see what we're looking like going through the end of the year into the first part of the year here. So right now we have S&P futures up. I have my trend model and a short-term chart up on the right-hand side. So this is a daily time frame. We're going to take a look at the S&Ps. All right. So the first thing that I like to see here is that we violated some of the key support. So the support in the S&P that so far this year has always been on the upper side of this line. So it always has been. And once we get down through that, then we stand a chance for some two-sided action. But above this line, and it's just every day 5 points higher. 5 points higher. Oops, 30 points higher. 5 points higher. 5 points higher. Oops, 30 points higher. That's the way the stock market's been running this year, north of this resistance line. All right, so now we're inside it. That's what I like to see. Possibilities for two-sided trades are starting to exist. Possibility for a downside move starting to exist. You can see here, over here, back to the left, guys, once it starts getting down inside there, look at the two-sided action. Then, bam, it gets all the way through it to the downside. Now, guess what? This upper line becomes resistance. And once it gets back inside this line, we have to assume that we're going to get a lot of two-sided action. So we love getting inside this area right here. It means we might get some two-sided action. So anyway, that's the first promising thing I want to look at. You know, I'm at extremes down here in all of my models, guys. So this is an extreme, but the beautiful thing is once we get to an extreme and it starts to weaken, then I start getting the magenta color on this indicator. So the trend, once it got up here, started to weaken. We get the magenta. We hit an extreme. This was the extreme point in the indicator readings, right here where my crosshairs are, a straight up line. It actually coincided with the stock market. All right, so let's take a look at some of the other studies, see what we look like. This one's busy. I don't use all of the indicators. We want to see it beautiful. It's broken below this indicator's broken below its Bollinger Bands, which means that it confirms the other indicators we're looking at. That's all I want to see here. This isn't timing or anything. This just shows me the health of the market. Okay, let's see. Yeah, that looks good. We got some red up here the first time. And the beautiful thing is you guys always know when I talk about the indicator I like to see where the bands are really tight, start tightening up. That's always an indicator for me that there's a top close by. Even though the tops only last like maybe 24 hours in this market, we can see here that the bands are, see how wide the black bands are here. Now they're just so tight they barely engulf that indicator. So that's a really good sign that again, we might see two-sided action, and who knows, we might even see a down move. You know, that's almost stricken from my vocabulary when analyzing the stock market now, is, you know, the possibility of a down move. You know, now I just say it's possibility of two-sided action. But stock market has done what everybody thinks it's not going to do for all of 2016. So it's a good possibility that this is the way she's going to go for 2017. Let's take a look at something else. We're going to look at the SPY for this one. I trust the SPY volume much more than I do the futures. So right here, what you'll see is we made the high and volume has started creeping off. In fact, I wrote an email that very day when the S&P made that high and said that, you know, volume's really not confirming any of this move. And then the volume analysis, volume model, just started completely falling apart. So now we're below that threshold where we could see some down-sided or two-sided action. We registered an extreme high here, an extreme high there. You saw we got this little sell-off immediately from that. It took a while for this to actually play out on the chart, but we got some downside movement there. And of course, you know, the volume model's just completely fallen out of bed. So I don't really trust this reading, the tick up on a Friday. How much? We actually had 1,250,000 contracts. That, trust me, that's not a lot, guys. most of the time by 11 o'clock, we're looking for the S&Ps to register 1 million contracts. Trading's been just really, really light. Even though this is normally a very light time of the year, it's been abnormally light these last 2 weeks. All right, so our volume analysis is not looking good as well. Yeah, let's open this one up a little bit more. All right, so we're getting down below what I call my line of departure. This is not a moving average. It's a moving average of some cyclical action. So I always like to see which side the market trades on. It's very seldom, once it gets on one side or the other, it's usually best to play on that side, until it resolves itself back to the other side. That's what I've noticed about this. It's a very good line of departure. So if it gets above it, you can bank it's going to stay above it until it crosses below it. That's about as good as it gets in stock, in price analysis, guys. I mean, it's really about as good as it gets. So now we're starting to get below it. That's very, very promising for January. Now this is the second model I like to see for constrictions to let me know that a top is close by. I kept watching this one the whole time, December, when it started constricting. So we went almost the entire month of December, and then all the other models caught up to it, and we finally get some downside action here. So again, guys, these are just things that I use. I don't trade each of these models for buy sell signals. I look at each of these because they tell me a little something differently. So I'm just trying to build chains, those links in a chain, and put all those links together to come to a conclusion. It doesn't mean these things, the story that these indicators build for me don't play out overnight. They play out over the course of, in the old market, days. Now it takes months for these things to play out on the upside. The bottom is different. When you get into a reversal area in the bottom, on the bottom of a stock market move, or lows when the market's selling off, yeah, it resolves itself overnight. But anyway, that's how I use some of these models right here. So I like this, like it a lot. This is just another model, has some of the same stuff in it, but again, it paints a picture for me. So what I want to see here is, so now we've got a down move. What I would like to see is a little bit more pressure to the downside. And because the indicators, because these models are playing out the way they're playing out right now, any rally in the stock market in January, and I would be more apt to play to the downside, just the way these indicators are unfolding right now. So they're unfolding kind of like they normally would in a normal market, even though we're not normal right now. So it'd be worth taking a chance, taking a shot for me to treat January, if we get more downside action than sharp rallies, to sell those rallies rather than to think that they're going to keep going to the moon. I am very bullish, don't get me wrong, but I might play this one, and I might miss. I might play it like I normally would an old a market setup in the old days. So I'm liking this setup as well. So what I'm looking for is, I'm looking in this model right here is I'm looking for this black line to move just inch, below that zero threshold right there, and then we get a green bar or two, and then a flush back down, And that is where if that scenario plays out, that's where I would be looking at just getting as long as I possibly can. One time, guys, you know how the scenario played out for us in the bond market? We nailed that one. We were all over it. It's a possibility that one time the stock market is going to throw us a normal setup, to the downside. It's a possibility. Don't count it out. When it does, if we've got enough juice in our juice bottle, then we can just load up. Take a look at the VIX. I was watching the VIX the same time I was watching all of my models to kind of key me in on when markets get at extremes. And I've written about this a lot of times, guys. This is something easy you guys can plot for yourself. It's really, really accurate, but it confirms a lot of the other models I have. And it's just a look at the VIX. So what I want to do is pull up the VIX. What we want to see in the VIX is we want to see the VIX close outside of the Bollinger Bands. These are just standard default Bollinger Bands. Whatever you plot on whatever platform, you don't have to change anything. The standard's the same on Thinkorswim, same on TradeStation, same on every other trading platform you have. It's the standard two standard deviation plotted against a 20-period moving average. All right, what we're looking for is we want to see the VIX start to curl up and the VIX explode higher and get on the other side of that black line. And then we're in an area where the market could collapse again. IV could collapse. This was the election day VIX reading. Okay, you can see here VIX got outside, volatility collapsed. Got outside to the upside here, volatility collapsed, stock market goes higher, gets out here, market sells off quickly. Market didn't sell off any right here. This was just pumped in volatility because of the election. But when it did sell off, we had that monster collapse. So that's kind of what we're looking for here. You guys can plot this on your own. You can go back and just look at how the market, I prefer on the downside. It's very seldom that it closes below the Bollinger Band to the downside. It's just the nature of this market. I much prefer putting like a weekly look and then laying my crosshairs on the bottom to get to a point where we might where the VIX might start to expand to the upside. So we hit that, and that was one of the reasons I put the UVXY trades and the VIX trades on, was the fact you can see my crosshair, see how it lays right across the bottom there. The VIX has a tendency to pop in volatility anytime it gets in that range right there, which is in the 11s. So there's been one time where I've seen it get to 10 and I think 9. That was back before the big collapse. So anyway, that's just a look at the VIX. I'm just taking a look here to see if anything sticks out. No, nothing really that we haven't already talked about. All right, guys, I think that is a wrap for today. What I didn't put out were the statistics for our weekly ranges, and I can tell you none of the levels were breached, so all of the stats go up a notch. No need to look at them. We're roughly all second level numbers, which you guys know is 2 standard deviations. All markets that we monitor are inside those 2 levels. Anywhere from 92 to 95% of the time, right in line with the statistics. First level, the S&P trades inside the first level roughly 90% of the time, and the other markets are right in line with the standard deviation models. So anyway, no need to really flop those up. Once again, hope you guys have a really nice new year, and I'll put some updates out over the weekend before we get back into trading. I think I haven't looked to see what the schedule is for Monday. We'll probably have at least futures trading, I would imagine, maybe some currencies. I'm not sure about anything else. I think that's the observed holiday, so the equity markets are probably closed. I would look for Tuesday to be the first full day back, so hopefully we'll have some volatility. Anyway, we'll talk to you later. This is BA signing out.